Good afternoon, it's Adil Fazal here, bringing you market analysis on the FTSE 100 on behalf of CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about these services and free products, just visit CFDS.com, or alternatively the educational website www.cfds.education. Okay, a review or end of day market wrap up on the FTSE 100. So let's begin. Okay, so we have the fundamentals always first. Okay, so the Asian markets were mixed. We had the Nikkei down, whilst the Shanghai obviously ripped and reversed quite violently, up almost 3%. Now the Nikkei was down minus 2.4%, whilst the Shanghai was down. Well, Shanghai actually was down 1 %. But obviously we reversed in the final few minutes based on the Chinese data. We had weaker imports. Imports were weaker, whilst the exports were stronger. So slightly mixed, but from a European market perspective, even though the Shanghai was bullish towards the close, and it was being interpreted as being bullish in the sense that exports have increased, and the trade balance obviously was then subsequently better than expected. And also given the fact that we had a Chinese central banker state that the bottom was in the market, regardless of that, the Nikkei being lower is a risk-off scenario from my perspective, and the Shanghai being higher it may well be bullish for Chinese individuals or Chinese investors, but it's bearish for European traders or investors, because weaker imports means that the Chinese consumer is obviously is actually feeling the pinch, and the growth and the slowdown, etc. Story certainly is real. Okay, so if Europeans are exporting a few less, okay, therefore it's a risk-off scenario. It's bearish. That's how we interpret it. Okay, so that's the important aspect here. Okay, so that's the understanding from a fundamental perspective, especially given the fact that we had Nikkei lower and weaker imports. Therefore, one would interpret that as being bearish. But the FTSE had other ideas, even though the oil price had actually fallen quite substantially overnight, although it has put in a nice little reversal now, especially copper as well. And the dollar obviously has fallen. As you can see, the Aussie and Kiwi are firming pretty impressively. Okay, so either way, that's the scenario that we had. We had Glencore rally on Monday, obviously, and that obviously fed through today to a large extent, given the fact that the Shanghai market was higher as well. And that obviously triggered a short squeeze rally. Now, we also had German data that certainly helped, although from a FTSE's perspective, the actual BRC sales data overnight came in worse than expected. The actual economic data, BRC retail sales, came in at 1.2% year on year, although it was negative month on month. So overall, it certainly wasn't bullish, or certainly was not a bullish scenario from my perspective or understanding. If I can just go back and confirm the data itself, we had the BRC like for like was minus 1% overnight. Expected it was plus 0.9%. Actually came in at minus 1%. So obviously that was negative. Therefore, and given the fact also we had some several firms. We had an article out for yesterday as well with regards to the actual growth of the export sector stagnating. Also from a FTSE 100 perspective, we had sterling starting to bounce as well. If I bring up a chart of sterling, as you can see, we had quite a stellar bounce today on sterling, feeding through from yesterday's potential move or potential bottom, and that obviously is negative for the FTSE 100 in the sense that the price of its currency is rising, level of its currency is rising, and therefore that should be hurting export sector. So, and that obviously did not take heed. The FTSE didn't take heed, and certainly moved up quite impressively as well. Okay, so that's the scenario that we see here with regards to fundamentals. The German data negated the weaker Chinese data, and that obviously propelled European markets higher, which obviously took the FTSE 100 along with it. Okay, even though oil was down overnight and we had weaker Chinese imports. But the market is king, and it will dictate which direction it wants to move. We have to respect that. Stop losses obviously are there to protect us, and therefore we adjust accordingly. Now, from my own trading perspective, I was stopped out multiple times today on my FTSE shorts, on my Euro stock short, on my Nasdaq short as well. Although I did manage to get some shorts in towards the afternoon, and they were certainly positive. Okay, so let's look at the market from a technical perspective now that I've explained the fundamentals, mainly due to the late China's reversal negating the weak Nikkei market. Okay, so the market certainly has held up well. Daily chart perspective, let's just observe that again. The market was still an inside bar, even though China obviously put in an impressive reversal. The FTSE still failed to hold its gains and evaporated. We have this bearish engulfing pattern, but again we are making a higher low as explained yesterday, so bear that in mind. 60-minute chart, we're in this symmetrical wedge type pattern, so therefore one must remember that we seem to be oscillating between the two, and also obviously we've got the horizontal support zone down here as well. Okay, so we're oscillating between there. We obviously the most important factor is that we are making a higher low, we're not making a lower low, so that's something that one needs to take heed of. But when the Nikkei is down almost 2.5% negative 2.5% overnight, that's something that we must respect as well from a risk-off scenario. Okay, 10-minute chart of the FTSE 100. We have put in a H&S formation, so this is something that I'll share with you right now. So therefore, those that are obviously starting to become bullish, just some precaution there. Okay, so again, this is a chart that we're observing. So you have your left shoulder in, your head is in, obviously, as we can see there. Your right shoulder obviously is in. We've held that neckline, and you are looking for a thrust and a move lower on the FTSE 100. So in the short term, you are looking at a potential retest of the 6125 region. So that's something that you certainly need to bear in mind if you are trading the FTSE 100, and obviously be mindful of that pattern as well. Okay, if the market starts to flush, then you have this 6100 support zone. If that fails, the diagonal trend line, then you have a horizontal support at 6080. Obviously we've got previous resistance equals support at 6125, and that will be the key pivot zone or support zone. The neckline or the head is 6190, 6200, call it 6200, round it off. Your basically your neckline is 6150, so you're looking at 6100s on the downside, so 50.4 on the FTSE 100 on the 10-minute chart. Given the fact that the daily chart candle is still bearish and the diagonal trend line resistance on the 60-minute chart certainly is intact, you are looking for a potential thrust lower on the FTSE 100. Given the fact, like I said, retail sales were certainly weaker, China's August import slump raises concerns of a sharper slowdown. This is something that you can read on the Reuters page itself. August import slump raises fears of sharper slowdown. As we all know, who is going to be exporting to China? It's the UK. If their imports are dropping, that certainly is not a good sign. They've dropped by almost 50%. That certainly is not a good sign. UK retail spending stagnates. British retail spending stagnated last month as mixed weather and later leisure, etc., etc. Therefore, bearish. Okay, it was just 1.1% higher than a year ago, smallest rise since April, down from 2.2%, etc., etc. So certainly not a good sign. Okay, so from my understanding and interpreting of fundamentals, certainly a risk-off scenario. Okay, again, the Nikkei index was lower by 2.5%. That certainly needs to be respected. Although the China obviously did offset a lot of the concern there. So that's something that I'm going to be observing and keeping a keen eye on in terms of understanding and interpreting the market's next move. Now we can cross-reference this with the FTSE 250. So if I bring up, actually we can bring up the volatility index. The daily volatility index is obviously holding into, or certainly holding resistance. And we are now into potential support for the VIX. Okay, so therefore be mindful of that, and you are looking for a potential move lower on the FTSE based on that information, or based on the chart itself. FTSE All Share again inside bar, so therefore one can't get overly bullish as of yet. FTSE Euro Top 100 again inside bar. FTSE Europe alone still struggling at this support zone, although it is holding it, so therefore one needs to be mindful of any potential reverse on the FTSE. Bear that in mind. FTSE 250 still bearish continuation band, and still an inside bar on the FTSE itself. The chart of oil certainly has attempted to claw back, or attempted to come back, like I explained in my video yesterday, which will send a propel the FTSE 100 higher. We've held that support zone, we've bounced, and now we are into resistance, and therefore resistance equals bearish for the FTSE 100. 50-minute, 15 minutes chart, or even a 10-minute chart of oil I can certainly try and share, and you can see that we're topping out around this 46 region and potentially putting in a reversal. Okay, the chart of the dollar index has been negative today, hence the reason why the FTSE certainly enjoyed this rally. We are stabilizing and holding support on the dollar index, and therefore is bearish for the FTSE 100. We've obviously gapped lower, and now looking to close the gap above. Okay, I think that's a wrap and a summation of the FTSE 100. In terms of the economic calendar, let me just look at my board for tomorrow. Wednesday, you have UK manufacturing production, industrial production, and trade balance data, so therefore, and also GDP as well. So that will certainly come into the equation. If I just bring up my economic calendar, you should be able to see it on here. Okay, so a raft of information for the UK, and therefore keep an eye on the sterling. And like I said, it has potentially bottomed, and therefore is posing as a negative factor for the FTSE 100 from my interpretation. Okay, folks, I think that's a wrap. Again, be sure to visit cfds.com, certainly, or cfds.com, and be sure to open up a trading account with them. They also have certainly attempt to open a demo initially, see how the platform feels, and obviously responds, and you can certainly trade with them. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye.